Mr. Watkins to E.J. Gregory. Do you see that, the lower of the two emails reflected on this sheet?
Well,
And E.J. Gregory, was that a person who was a part of the Duncan Williams underwriting firm,
yes.
investment banking
Yes,
firm?
it works.
And they're based in Memphis, are they?
That's correct.
And Mr. Watkins is indicating near the end of 2010, E.J., can you email me a copy of the commitment letter? Now, that would have been a commitment letter on behalf of the underwriting firm, Duncan Williams. Is that right?
I suppose, yeah.
And they are the buyer of the bonds, correct? They became the buyer of the bonds.
Well, the way a bond sale works, there's some variation on this. With a typical bond sale, you want to tell you how a bond sale works?
No, sir, I do not.
Okay.
I want to.
A typical
I
bond
want
sale.
No, sir, I do not
Okay,
want
well,
to
this,
do that.
in this bond sale, what would happen is Duncan Williams would go out and before we signed the bond purchase agreement, they would identify customers of theirs who were willing to buy bonds on these rates and so forth. I'm not directly involved in it. I don't exactly. I mean, they have conversations, get some general idea of what the rates would be, or work, and all that. And then when they pick the date to price the bond deal, which is the day you sign that bond purchase agreement, they basically have their buyers lined up, and then they will agree that we will buy the bonds, these bonds delivered on this day at this rate and so forth. And then they have customers who, in the normal case, they have customers who they're going to immediately place those with. Sometimes a bond firm will hold some for a while before they resell them, but in I think most cases they have people lined up to buy them at the time. And in this case, I don't know at the time, that's something that happens behind the scenes. But after the fact, I've learned that in fact 5 banks bought these bonds from Duncan Williams.
Okay, but at the transaction that is the subject of this case, on April 11, 2011, it was Duncan Williams who was the buyer of the bonds, correct?
They would be the initial, they were the underwriter.
Now they're going to resell them.
Right, they're buying them for resale. I mean, that's, standard securities law, purchasing to resale of underwriter bonds.
Yes, sir. But the banks were not parties to the closing in April 11, but the underwriter, Duncan Williams, was as the buyer of the bonds, correct?
That's correct. They're initially delivered to Duncan Williams. I'm not absolutely sure about that because these bonds, I think, were in book entry, and it may be that the time the delivery took place on closing day, that resale was already in, and this all happens at DTC. It doesn't happen, again, behind the scenes. Those bonds could have initially been booked on closing day to those banks. I just don't know the answer to the question.
All right, sir. But back to the email. It was on December 29, 2010, that there already existed a copy of a commitment letter from Duncan Williams to buy these bonds, correct?
That would not, I haven't, I don't know if I've seen that commitment letter or not. That's not something I would normally see, and that would have not been a binding obligation to buy. These bonds couldn't have been agreed to buy. They didn't exist at that point. They only became authorized when NBFC took action, which I don't have, I don't remember exactly when the NBFC resolution was authorizing this bond.
Okay, so I didn't answer that either. Look at the email.
Right.
When Mr. Watkins is referring in an email directed to the investment banking firm, Duncan Williams in Memphis, and CC to you, look at the email, and when he says, can you email me a copy of the commitment letter?
Right.
That was a commitment by whom to do what? Subject to what?
I don't remember the terms of it, so this is just kind of specifically, but only a commitment letter being with the equivalent of a sort of kind of letter of intent from a bank or something that says, we'll look at financing this subject to working out the right terms and everything. A commitment says we'll try to help you with this financing subject to due diligence and working out terms and all that. It's not a binding contract.
Okay, but I think you indicated that in such a commitment letter, the prospective buyer making the commitment would have already decided what price they would pay for the bonds, correct?
No.
Okay.
No, they would not do it. That's what I was trying to explain to you. That happens on the date that the bond purchase agreement is signed.
Okay. With
The bond
respect,
purchase agreement is the first binding contract to acquire bonds. Anything up to that point is toward block A. Letter of intent is kind of preliminary or something. It's not binding. Nothing binding. The bond purchase agreement.
do you know whether in the commitment letter that Duncan Williams communicated in December of 2010, whether they said what price they would pay for the bonds? You know, one way or another?
I don't know one way or the other, although you normally, Duncan Williams, they probably sent out numbers, what we call numbers, saying here's kind of what a debt service schedule might look like, if you're based on today's market prices. That's always kind of the caveat to that is that the bonds get priced based on the interest rate market on the day the bond purchase agreement is signed. So even if they preliminarily think they could do this, at 7% or 6% or whatever, they won't nail that down until pricing date, which is the date the bond purchase agreement is signed.
Now, the email says, EJ, can you email me a copy of the commitment letter? And then it says, Mayor Johnson announced the lease last night at the city council meeting, and I expect them to act on it no later than January 11th. I am attaching the latest draft of the lease that Sam Begley has prepared for your review and comments ASAP. Thanks, David. You see that?
Yeah.
Now, the lease in the city it's being referred to is the City of Jackson lease that you ended up electing to include as a part in April of the private purchase memorandum, correct?
Final signed version of it that came in, I think, maybe March or whatever.
Yes, sir. And that's the document, that's the lease that Duncan Williams was interested in getting and reviewing in December of 2010, correct?
Correct.
Okay. And then, indeed, December 30, 2010, Mr. Buddy Kreifeld, how does he pronounce his last name? Critchfield, also of Duncan Williams, the prospective buyer of the bonds, is emailing to Mr. Watkins. David, we have a draft of the letter. It mentions COPS, C-O-P-S. I will change it to bonds this morning and send you a draft for approval, and then send final. Do you see that? Okay. The letter, presumably, is a reference to the commitment letter from Duncan Williams that you and I have earlier discussed, correct? Okay. And he was already prepared to change it to bonds and send it to Mr. Watkins a draft for approval, and then send final, correct? Okay. This is the day after he learns that Mayor Johnson has announced the lease last night, correct? To the city council. And the day after Mr. Watkins has attached a copy of the lease, the latest draft of the lease as of that date, and sent to the prospective buyer of the bonds, Duncan Williams firm, correct? And this email exchange refers to no other document or lease or contract that Duncan Williams wanted to see for that purpose, correct? Correct.
It doesn't refer to it.
The next exhibit is 34, and you're the author of this email, correct?
Yes.
Now, it is directed by you on February 3rd of 2011. It's about 2 months and a week before the closing. It's directed to Mr. Watkins and to two other members of the Retro Metro LLC, Mr. Begley and Mr. Goree, correct?
That's correct.
And it's attaching your draft at that point of a Retro Metro private placement memorandum, correct?
That's correct.
And so by February 3rd, since you're attaching it, you had already drafted it, correct?
I had drafted that version.
Okay. And you're sending it to Retro Metro, correct, on that day? And you're saying attached is the most recent draft of the private placement memorandum that I will send tomorrow to MBFC. That's a reference, those four initials are a reference to what?
This new business.
Okay. to get it on the agenda for approval on February 8th. Then you say some of the City of Jackson information in Appendix A needs to be updated or deleted. We're getting Rick Hill with the city to help us with this. And presumably that ended up being 111 pages about the City of Jackson's capacity to pay the lease and thus pay the bonds that you chose to put up into the private placement memorandum, correct?
Appendix A is the information due to the City of Jackson.
Okay. And then it says, please let me know if you changes, and I presume that it meant if you want any changes, right? It happens in emails all the time, but if you are asking them to, if they had any changes to that, correct? We can make changes next week as well, but the document should be substantially final when we send it tomorrow, correct? Okay. One specific item that Duncan Williams wants to confirm is that leases on the other 60,000 square feet not leased by the city will be assigned as part of the assignment of the facility lease. Do you see that language? So Duncan Williams, the prospective buyer of the bonds, was interested at that point in two things. Number one, the City of Jackson lease, the City of Jackson fiscal information, and an obligation to assign to the repayment of the bonds other lease income that might come in for the same building, correct? Nothing, this is the prospective buyer of the bonds making reference to no other contract in which they were interested or wanted to review, correct? Not on this email.
Not at all. I don't see other document for
Not on any email, correct? You would expect that, would you? Correct? Then the perspective, then you're saying that this is how we understood it and how we drafted the document, but I want to make sure you are focused on this. Duncan Williams says this is important to the potential buyers they have talked with. Is someone drafting the lease from Watkins Development to Retro Metro, and then you sign off on the email, correct?
Correct.
Now, let's move to Exhibit 35, and which appears to be an exchange of emails among much the same parties a few days later, in February 8th of 2011. At the bottom, the earlier email at 8:32 in the morning is from Mr. Watkins to Duncan Williams, representative, and to you. And he CC two of his fellow members of the Retro Metro entity, Mr. Begley and Mr. Goree. You see that? The subject is City of Jackson lease. And Mr. Watkins is reporting, gentlemen, the City Council will approve our lease this morning. My lawyer advises me that there will likely be two significant changes. Number one, conversion from a true lease to a lease purchase, and number two, removal of the non-appropriation clause. Please advise me on how this will impact this transaction. My assumption is that it should dramatically change the economics of the deal, David. And I get to ask Mr. Watkins, but do you regard that as a statement by him that he did not expect it dramatically to change the nature of the two things that he's mentioned?
No, I wouldn't be honest.
What did you understand him to mean by this?
It's a little bit hard for me to reconstruct. We looked at several different possibilities for doing this financing, and there was kind of there was a lot of fluidness going on because there was one question of what Duncan Williams thought they could sell from a credit standpoint and what kind of rate they could get. If, for example, you had something that's stronger than the lease we wound up with from the City of Jackson, where it didn't have any non-appropriation language in it, and it was just a flat-out commitment by them. If you have financing structured that way, that would be a stronger credit and probably would have gotten better rates than, I don't remember what the rates were, something like 6 and 7, one bond was 6 something, one was 7 something, I think. That's not straight, something with City of Jackson, straight behind it might have gotten maybe 4 or 5% or so. I mean, it would have been significant, maybe better than that. It would have been significant improvement in rate. And that was factoring back into how much money could be, raised with that as the collateral. So you had that going on, and then you had a question going on about whether this could be done tax exempt or whether it could be taxable. And there were a couple of issues there at the time. I'm thinking this is 2011, so I'm not absolutely sure about this. I'm just real deep, but at the time, I think there was still some GOZO bond allocation out there, and we were making an application to get some of that allocation, maybe through VA and so forth. Had we done GOZO bonds, that would have been tax exempt, but that didn't come through. But that's one reason for the initial business finance court involvement is GOZO bonds. Another way that it was possible to do a tax exempt type deal was to do the COPS there refers to certificates of participation. And the way those work is you basically have a lease, like you have in this case, from the governmental entity. Unfortunately, Bailey kind of drafted this lease and negotiated it in a vacuum from the financing, so it didn't actually fit the way you normally do it, at least if you're planning a COPS transaction. And then you also have to have documents that, like a trust agreement and things that the city would enter into in addition to the lease agreement. And I don't remember why, but there's questions about, for whatever reason, it's thought the city had approved what they were going to approve. There was no desire not to go back and get them to approve anything else or be a party to anything else. They got the lease part done. And so that COPS idea, which might have been tax exempt, that got dropped. And so we came back to the taxable structure, and where we wound up having the loan agreement like I described. We had the lease, and we signed the lease as collateral. And that's not quite as good a credit as we are selling direct participation interest in a lease, which is how COPS works, plus it can't be tax exempt. And then it looks like I'm referring, at this point, I'm also thinking about, depending on how this is structured, and some other potential issues, the arbitrage regulations. There's lots of the IRS has books full of complicated regulations and arbitrage and things like that come into play when you're trying to do taxes in the deal, and you're trying to figure out how that might come into play.
Okay. With respect to this deal in this period of time, except for the different legal vehicles and variables that you've described to us, the only factual variable that was governing the decision-making about what interest would be paid on the bonds and what the price of the bonds would be the terms on which Jackson was obligated to pay the lease in its fiscal capacity to do so, correct?
Well, there would be, there could be lots of factors. Yeah, basically the term, that would, from a credit standpoint, how Jackson would pay the lease would be important. If you had a deal where they're committed 100%, then that's a totally different transaction, not appropriation. So that's a better deal. I don't remember if anybody ever thought they could get that. We never had any direct. Sam Bailey, I guess he was a member of Retro Metro. He's not now, but he was at that time. He also was doing some legal work for Retro Metro, apparently some legal work. And he didn't draft this development agreement. He didn't form Retro Metro. He didn't do the operating agreement. I believe that Watkins did those two things. But Sam was doing the lease negotiating. My impression was he was the liaison with the folks at the city trying to work out the details of the lease and stuff. So.
But the only contractual terms that affected any of the analysis that you just described about what interest rate the bonds would be associated with and what the price of the bonds would be was the terms on which Jackson would be obligated to pay the lease directly, the lease payments directly, and the bond indirectly as a result of the assignment, correct?
That's primary. I hate to give like a simplistic answer because bond pricing and so forth, there are factors that can come into play, but that's the main thing the underwriters seem to be focused on was
Well, with respect to
credit of the city and what the city's looking to do. And what, there are probably other bells, and you could add it. Like we did, kind of, if you besides the lease, the collateralization includes the unleased space, the retro metro line, and so you can do some things like that to enhance the project. That other space was unleased, and there were no prospective tenants at that time, so. Did that factor in? Well, maybe a little, but it's hard to know how much that got weighed in by them figuring out their potential buyer. So, I think I don't want to give a too simplistic answer, but primarily it was primarily sold off the city of Jackson as the primary solution initially to take that service, with the idea that it's a rough number. Part leased in the city of Jackson, 60,000 square feet, and the total part on the total space on the retro metro is 240. So there's 180,000 square feet that potentially could be leased down the road, but there were, as we disclosed, and there were no leases at that time. So the only revenue stream that the buyer got to know about was the city of Jackson revenue stream that would kick in once they moved in.
that was the only revenue stream that they expected to exist in the short term, and that was the only contract that they asked about, correct?
That's correct.
All right. Indeed, consistent with what you just described, near the top of page Exhibit 35, you see your responsive email. That is great news from a strength of credit standpoint. Do you see that?
Yeah, that means you don't have a non-appropriation clause. It means that's a strong credit. I say every year we're going to decide whether to put in our budget.
Just so we're clear, the non-appropriation clause or an appropriation clause is with respect to the city of Jackson's contractual obligation to appropriate the money each of the 20 years to pay their contractual
It's that
obligation.
language you were reading from in the PPM a while ago that under the heading City of Jackson was
Right.
that paragraph requested the non-appropriation.
That paragraph. And whose idea was it to bind Jackson to not relocate its employees if it failed to pay the lease on this lease out at these lease payments to Retro Metro? Okay. But you
I
think
don't think
that
they are. I mean, the leases that finally wound up has a non-appropriation clause in it. So whatever that was about back then didn't. The current lease has something in there that says it's subject to annual appropriation, so that didn't work out.
Right. Okay.
That's part of the fluidity I'm talking about.
Correct.
Things being thrown out there that didn't either couldn't, because the NBFC wouldn't agree to doing it that way, or whatever. Things didn't work out.
But all of these things, all of these factual variables, and all of these emails concern what would the terms be at the City of Jackson's lease, correct?
Yeah. We had what NBFC's was willing to approve with what the City of Jackson was willing to do, and then to the extent we were trying to figure out the taxes, we had federal tax law, so we had the interplay of all those things to try to come up with a structure for this.
Okay. Continuing on your own email of February 8th of 2011, you indicate that since the plan is to use proceeds of the financing to enhance property that will be owned by the city, there is an arbitrage question. The issue is whether the lease is considered investment property acquired with the proceeds. And you see the remainder of that. If the lease is investment property, you're talking about the arbitrage issue there that would be affected by the lease terms, correct?
Yeah. Do you explain that?
Not the arbitrage question, no. But it's. I just want you to see that your observation about the arbitrage.
The fact that this wasn't going to be a government. Tax exempt financing is much simpler when the government simply does the financing themselves directly owns it, and this wasn't going to be that way. and there's a limit. What arbitrage does is limit how much money you can use making taxes and bond proceeds. So then you'd have to look at the rental payments and see if you were making a profit off of the rental payments over the debt service, and if you were, you probably have to you blow the tax exemption of your bonds, or you have to pay some of it back to the government or whatever. That was the investment property arbitrage issue we were talking about.
Now, Exhibit 39, please, sir. On March 25th, about 2 weeks or 2.5 weeks before the closing of the bond transaction, Mr. Watkins is emailing you and Buddy of the Duncan Williams firm, and he's saying, gentlemen, I need a firm closing date and proposed disbursement schedule and a final set of closing documents to review. When can I expect all of that to happen? And then the gentleman from the Duncan Williams firm, the underwriting firm, the investment banking firm, the prospective buyer of the bonds, communicates back to Mr. Watkins and CC's you. If we have an offering document by Tuesday or Wednesday, we can write tickets and have a firm deal with the board, with a bond purchase agreement almost immediately thereafter. And we will fund all of the money into the account with the trustee bank, and we will withdraw monies based on the draw schedule you provide to the trustee. I think most of the documents needed for closing are complete or at least close. And then he says the only item remaining is the signing of the lease and having legal description of the property being leased in the condo documents. Keith is working with a real estate attorney to determine when he will have the documents complete. Do you see that? Once again, that's a reference to the City of Jackson lease with which they were entirely concerned, correct? That's the only lease referred to. Okay, it's the only lease referred to by them. It's the only contract that they referred to, correct? Okay, look at Exhibit 40. It begins on about that time, on March 25th of the same year. You emailed apparently Mr. Watkins, and the Duncan Williams person has said to close Retro Metro needs to have acquired the facility, and the City of Jackson needs to have executed the lease. The private placement memorandum will represent that those events will occur before or simultaneously with the issuance of the bonds. You see that? Okay. And then Mr. Watkins responds to you, Keith, I need to know how we can handle the condo portion of the project. To expedite matters would be sufficient for Watkins Development to convey the entire building with a provision that Retro Metro reconvey back the second floor. That could be done in one day, not slow us down. I'm trying to get Sam to get a lease executed by Monday. You see that? Yeah. And that the reference to the lease execution, that he's reassuring you and the underwriting firm that's to buy the bonds is a reference to the City of Jackson lease and none other, correct? Look at Exhibit 41. This is March 29, about a week later, and about 2 weeks before the closing the bond transaction. It's from you, and it's to Mr. Watkins, and again, Duncan Williams principals and other principals in Retro Metro. And you say, as soon as I get the signed City of Jackson lease, I can complete the private placement memorandum and send it to Duncan Williams so that they can complete the sale of the bonds. You see that? If I have the lease in the morning, I will show a delivery date for the bonds on the cover of the private placement memorandum of Thursday, April 7. and then it's reference to other transaction documents that need to be signed. And then you perhaps would not have known of this, but you see at the top of Exhibit 41, Mr. Watkins in response communicates to Mr. Begley, Sam, I guess you see the importance of getting the lease signed in the morning. You think it will happen? And that too is a reference to the City of Jackson lease, correct?
Right. I think I mentioned earlier, a lot of this email, my continued emphasis on the property, to be transferred the property, the lease, is that there had been an idea that we could go ahead and do the financing and get that done later, and which would work. And so I kept emphasizing we can't sell, we can't do the financing, we can't sell the bonds and close until we have a signed lease, until Retro Metro can't lease something that I own. So first they have to own it, and then we have to have a signed lease. And the kind of the recurring point is not, it's not financing first, then those things happen. It's, get the property to them first and sign the lease, and then those things can happen. So.
Okay. Sir, do you want me to seek a stopping point, or do you have any plans with respect to lunch?
I'm up to y'all's desire. We have to take care of this one. We cannot proceed without her. We'll probably do without me.
Fine, whatever, honestly. I'll leave that to you guys, yeah.
Let's take a quick volunteer vote.
Do you know
It's
how much
12, almost
longer
12:20.
you're going to be spending with your cross-examination? Are you almost
Maybe
finished?
15 minutes.
I'd say let's go and finish across, and then we'll wait for lunch,
Yeah.
if that's okay with everybody.
I'd rather do that than have to have our witness come back after lunch break.
Is that okay with you?
Yeah, this is great.
If you'll look, please, sir, at the Secretary of State's exhibits, I believe it's number, well, originally it was number 8. It's the loan agreement between NBFC and Retro Metro. It's the loan agreement.
It's 6.
It's now 6, okay? Page 13 of that, near the bottom.
Let's see if I can find it. Page 13.
Yes, sir. Mr. Parsons, do you have that with you?
Yeah.
Okay. This is below Article 3, Section 3.1. And see if I'm reading correctly the third, the last paragraph. It indicates that in order to effectuate the purposes of this agreement, the company, and that's a reference to Retro Metro, correct?
That's correct.
Will make, execute, acknowledge, and deliver, or cause to be made, executed, acknowledged, and delivered all contracts, orders, receipts, writings, and instructions in the name of the company or otherwise with or to other persons, firms, or corporations, and in general do or cause to be done all such other things as may be requisite or proper to the proper acquisition, construction, installation, and equipping of the project and fulfillment of the obligations of the company under this agreement. Do you see that?
Yes.
So Did you write that language, or choose to insert it?
Yeah, that's language, standard language.
Right. And understandably, the parties are obliging Retro Metro to enter whatever contracts are going to be necessary in effect to be an effective landlord to the city of Jackson, so the city of Jackson will pay the lease obligation, it will pay the bonds, correct?
Well, I think what specifically this is talking about, and some of the concepts flow through the things, is the retro metro, and this is not unique in all these deals, the key thing you're financing is a project. And so you're committing to get the project done. The very thing that certainly the project never got done, but that's what this is about. It's about saying we will do whatever is necessary to get the project done.
Well, it specifically obligates Retro Metro to make all contracts that may be required for the project to be done, correct?
That's correct.
I mean, the bondholders and you expected Retro Metro to continue to enter contracts that would fulfill the purpose of the project and satisfy the tenant, City of Jackson, correct?
Yes, we believe this document, those covenants that you make people want to will say that we need to do things to maintain the project and cause it not to be destroyed and things like that.
I mean, the
Keep it
bondholders,
insured, those kinds of things.
right, it would not have been a surprise to the bond buyers that Retro Metro was going to enter contracts to get the property, first of all, bought from Watkins Development,
That happened pretty close.
renovated to the City of Jackson's specifications, and otherwise enter contracts necessary to turn on the lights and do the other things that would be necessary to keep City of Jackson as a tenant for 20 years, correct?
That's correct.
Not only did they expect that to happen, they required Retro Metro to do that, correct?
Retro Metro is required to do whatever is necessary to get the project done.
Now, and that necessarily would include entering contracts, correct?
It's like subcontractors, people do painting or
Right.
mechanical
Yeah.
work.
Now, there nowhere in any of the closing documents did Retro Metro enter an obligation to disclose to you or to Duncan Williams or to anybody else copies of all of those contracts, correct?
Well, every time David Watkins.
No, you need to answer my question.
I'm answering your
Is there any term in here?
Yes.
Where? In what terms?
The
I've
loan
the
agreement.
written terms now.
The loan agreement says that to withdraw money, and I think this is in trust indenture as well, I'm going off the top of my head here, but the documents say that.
I want to, you have the documents in front of you. They're on this table. There's no need to go off the top of your head. If there's a term in here that obligates Retro Metro to produce to you or to anybody else for the purpose of this bond transaction, copies of all of these contracts that it was obliged to enter, where is that term?
If you look at Exhibit C, loan agreement, form of requisition. Form of requisition is referred to 2.5. Section 3.3.
Okay, where are you talking about in what I believe is Exhibit 6, which is the loan agreement?
Looking, well, there's Exhibit C is the form of requisition.
Okay.
Exhibit C to Exhibit 6, the loan agreement, is a form of requisition. form of requisition, I believe it's referred to in 3.3, disbursement of funds. Each of the payments, I'm reading from 3.3, each of the payments to be made from the construction fund as herein provided should be made only upon delivery to the trustee or a requisition certificate with supporting documentation for the bank's review in the form of Exhibit C attached hereto, signed by company representative. Then here is Exhibit C. And Exhibit C says, in addition to the other conditions set forth in the loan agreement, the obligation of the trustee to make any disbursement from the construction fund is subject to the satisfaction of the following further conditions. The representations and warranties of the company contained in the loan agreement and the other documents shall be true and correct, on and as of the date of such disbursement. The company shall have observed and performed all of its covenants, obligations, and agreements under the loan agreement and other loan documents. No default shall have occurred and be continuing, and there shall not have occurred any condition, event, or act which constitutes or notice or lifetime and so forth would constitute a default, and no material adverse change in the property, assets, liabilities, business operations, prospect income or condition, financial or otherwise, of the company shall have occurred and be occurring. Then the next paragraph says each request by the company for disbursement shall be deemed to constitute a representation and warranty by the company on the date of such request as to the facts specified in section 3.4 of the loan agreement. And then you go back to these representations and warranties, and you get things like the one I read a while ago that says that any kind of material agreement that might have an adverse effect on the, or that would affect the business operations, et cetera, the company has been delivered. So I think through that, through 3.3, requiring you to submit a requisition, it requires you to say every time you submit a requisition in order to get a disbursement that all the reps and warranties are true. Reps and warranties covering things like changes, for example, the initial disbursement of $400,000 after on the day of closing as partner distribution caused the company to become insolvent. That would have been a material thing that affected the financial conditions. So something like that would need to be disclosed. Or the other kinds of, if there was an agreement like the purported the putative, I think Crossing's calling it, development agreement, then to the extent that hadn't been disclosed already, once that became discovered, came into existence, it should have been delivered and disclosed under that chain of requirements that I just read to you.
All of which are contained in the requisition form, correct?
Not reference yet.
Okay. So the requisition form that is Exhibit C to Exhibit 6 in this hearing is the one document that you assert now included an obligation on behalf of Retro Metro to disclose to you or to the bond buyers copies of all of the contracts that Retro Metro had entered, correct? Is that the one document?
Well, the loan agreement itself said that. That section we read all ago.
Okay.
But what I read to you in the requisition makes all the covenants and all the reps and warranties be sort of evergreen. Every time a disbursement is requested, they're all made anew. So they're made on April 12, 2011, and then I have a list of disbursement dates here. But every disbursement date that happens after that, they're made again, and then you're saying that all those things you said before. So if you said initially that I've given you all the material agreements that have been given to the issuer, the trustee, and the purchaser, and then new material agreements come up, and this requisition is saying that there's a material agreement now that wasn't there when I made this to begin with, I'm now required to give it to you now.
Okay. But all of the requisitions were to be made and were made after the April 11, 2011 date, correct?
Some of them were made on that day.
Okay. But none of that's requisitions for funding after the bonds have been purchased, after the closing has been had, and after the bond buyer has made their decision to buy the bonds, correct?
And the bond buyer's decision to buy the bonds is they're legally entitled to rely on the fact that every time the company draws money out of the construction fund, that what they say in their requisition they're using it for is accurate, that they'll have supporting documentation to show that's what they're using it for, and that every covenant has been complied with. There are no defaults as of that date. And they also are entitled to rely on the fact that everything that was said was true in the loan agreement will continue to be true as of the date that disbursement is made.
But whatever.
They are making that investment decision. Or to flip it the other way, if you told a potential bond buyer that we're going to get rid of all these covenants and warrants, they don't survive closing. After that, and they pull money out, you're just on your own. That's the way these documents work. People would say, no, we wouldn't buy those bonds because they're relying on the idea that there's going to be an ongoing testing of these material factors that are covered by the covenants and the representations and warranties as money is withdrawn down. That's part of the deal and the expectations that the bond purchaser is entitled to rely on.
Okay, but the purpose of a requisition form is to ask for money to be drawn down after the money goes into an account as a result of and after the closing and the buying of the bonds. Isn't that true?
That's true.
Okay. So the requisitions would never have been tendered until after that moment, correct?
That's correct.
And anybody knew that that's the nature of the requisition. It's after the bond purchase has been made and the funds dispersed into some account as a result, subject to later requisitions, correct?
That's correct.
And it's only in the requisition form that you see any obligation on the part of Retro Metro to disclose to you or to the bond buyers all contracts it had, correct?
No, I saw one of the provision we read a while ago earlier about material agreements and obligations.
Are those the two documents that you're now referring to as an obligation to present all contracts? Those are the two you've mentioned. I want to make sure that those are all.
The loan agreement is Exhibit C.
Okay. Exhibit C of the loan agreement is the requisition form that we talked about, correct? And now, what is the other language in any of the closing documents that, in your view, obliges Retro Metro to submit all contracts to you or to the bond buyer?
There's certificates like the David Watkins signed that closing certificate that said everything in here is true.
No,
I'm kind of incorporate by, they're sort of derivative of this, but the fundamental obligations as far as reps and warranties and covenants from the borrower's standpoint are in the loan agreement.
Okay.
And there might be other things that make reference to that. For example, the trust indenture says, if one of those gets violated, it's also involved under this trust indenture.
Okay. Well, I'm not asking you about terms in general, and I'm not asking you about what may have existed in some documents. I'm asking you where else in the loan agreement or any other of these closing documents, apart from the requisition form, is there a requirement or an expectation that Retro Metro will supply to you or to the bond buyers all of its contracts?
It's material contract. Where's this? Before you had one that was tabbed. Oh, here it is. Okay. It's in these representations are in 2.2, representations of the company. K, other than any agreement, 2.2K, other than any agreements which have been delivered to the issuer and the trustee or the purchaser, the company is not a party to any indenture, agreement, or other instrument materially and adversely affecting its business, properties, assets, liabilities, operations, income, or position, whether financial or otherwise.
Okay. Now, is that other than the requisition form, is that the only language that, in your judgment, allows Retro Metro to tender all contracts to you or to the bond buyers? Is that it?
Well, I think they're generalized. Like, for example, under C, the execution of the loan documents confirmation contemplated hereby or fulfillment of or compliance with terms, conditions, conflicts with the terms and conditions of loan documents, conflicts with, resulting in breach of the terms and conditions, something of any material for prescription agreement or instrument to which the company is now party or to which it is bound and so forth, constitutes or so forth. I mean, that language, for example, I think, not being the bond documents as I've described before, in this development agreement you claim exists, at least as you interpret, your client interpreted it, are a conflict with each other, so that would be an incorrect representation. There's many other, I mean, you basically have a general obligation. There's catch-all language in here that you probably could go with that. I think, K seems to be pretty right on point. C is on point.
We're going to go through those two either before or after lunch, but I'm asking you very specifically, what other language, in your view, obligated anybody on behalf of Retro Metro to give you or the bond buyers all of its contracts?
Off the top of my head, those are the provisions I remember.
Well, that's the same head that drafted these documents, correct, back in 2011. You're familiar with
In
them.
April 2011, you're familiar with what it is.
But those are the two terms.
Yeah, you understand I drafted 120.
That's fine. But can you identify any other terms in which?
Not right now.
Okay.
Well, time to study. I might sit down and find some more language in here, but right now,
Well, in all fairness, if whether you're discharged from cross-examination before lunch, I'm going to ask you during the lunch hour, as the one person who compiled all these documents, to find any other language other than what we're talking about. But let me ask you first about C on page 12 of Exhibit 6. What of that language obligated Mr. Watkins or anybody on behalf of Retro Metro to give to you or to the bond buyers all of Retro Metro's contracts?
at that point, they're obligated to give it to the issuer, which is business finance.
I'm looking at the language now. This is about contracts that you're the author of. I'm looking at this
You're
long.
talking about Exhibit C?
Exhibit? No, sir. Page 12 of Exhibit 6, which is the loan agreement. Near the top, this is the C that you've just identified for us.
Right.
Now let's
Okay.
focus on the language that you've identified.
No, it would require you to give documents. It would just say that if there existed a document that was in conflict with the bond documents, which you claim that there does, then this would have been a false statement. But this says there isn't a document in conflict with loan documents. Loan documents say proceeds should be handled this way. You say that you take this development agreement, gives you the right to just take money and do whatever you want to with it.
It doesn't say that, does it, Mr.
It
Parsons?
pretty much, your interpretation of it.
No, sir. You and I have never had a communication about how to interpret that development agreement, have we?
I heard you argue about it over in the Retro Metro versus Meridian law enforcement case when motion to compel arbitration was argued.
And on what basis do you suggest that anybody in this room thinks the development agreement gave anybody the opportunity to do whatever they wanted to with any money?
You said that David Watkins was in control of Meridian law enforcement, he was in control of Watkins Development, he was in control of Retro Metro, that he could kind of agree with himself to move money around and he didn't have to document any of it. That was basically your oral argument a couple months ago before Judge Kidd.
Okay, what does that have to do with this, the language in C we see?
These documents say that there's a specific process for spending bond proceeds and getting paid. It doesn't say that you can just shuffle bond proceeds down to a company's name and party to it and let them just sort of pay it out as they see it.
I didn't ask you that. Nothing in this language in subsection C, near the top of page 12 of Exhibit 6, obligates anybody on behalf of Retro Metro to produce to you or to the bond buyers all of Retro Metro's contracts, does it?
No, that C does not.
Okay. Now, let's go to K, which is the final language that you have suggested to us does that. It says, other than any agreements which have been delivered to the issuer and the trustee or the purchaser, the company, and that's a reference to Retro Metro, is it not? Is not a party to any indenture, agreement, or other instrument materially and adversely affecting its business, properties, assets, liabilities, operations, income, or condition, whether financial or otherwise. Do you see that?
Yes.
Now, on the previous page, as one expects in these matters, there's a warranty that there are no proceedings, legal proceedings, that threaten to materially adverse affect Retro Metro, correct? That's on the previous page, page 12.
Which paragraph?
Subsection D.
Yes.
That's it. So here, and then on the next page, we again hear a reference to materially and adversely affecting the enterprise of Retro Metro, correct?
Correct.
That didn't obligate Retro Metro to give you or the bond buyers all of its contracts, did it?
The bond buyers and the purchasers.
The bond purchasers.
It gave them, obligated them to give contracts that materially and adversely affected the business, et cetera, Retro Metro.
And discharging the very obligation that the same page puts on Retro Metro to enter all contracts necessary to be an effective landlord for the city of Jackson. Going and doing those things that the document obligates Retro Metro to do is obviously not adverse, not materially adverse to the functioning of Retro Metro, is it? It's necessary to the functioning of Retro Metro.
It's not necessary to function of Retro Metro, for the reason I explained before. If you had wanted to handle this in the way that's appropriate, Retro Metro would have entered into contracts, money would have been dispersed out of the construction fund, pay actual vendors, actual subcontractors, for the project. To the extent Watkins Development actually provided a service, which I think we could argue about whether that happened or didn't happen. They clearly didn't provide much of a service because the project never got completed. So the contracts necessary to complete the project weren't entered into. Instead, what happened, this development agreement was entered into, according to you, it was entered into, and according to you and your client, it gave the right to pull the money out of without, really giving any explanation what it was being used for, into Watkins Development, and with just vague explanations, and then to be kind of whatever and spent, and that is what resulted in the problem. So yes, that contract did, if that's what was relied upon to handle the funds in the way they were handled, one, then that contract, as interpreted and used by your client, conflicted with the loan documents, and so C was false. And two, it materially and adversely affected the financial condition of Retro Metro, as evidenced by the fact that it's in default of its debt and had to go out and incur a bunch of additional debt to finish its project. So clearly that agreement, as interpreted by your client, had a material adverse effect on Retro Metro.
David, you've characterized all of these catastrophes that have happened in the many months since April of 2011. David Watkins separated entirely from Retro Metro in July of 2012, didn't he?
January, July 23rd, 2012.
Okay, is that true?
Right.
Okay. Now,
damage was fully done by that time.
in your opinion?
Hopefully we'll get a chance at some point to demonstrate it's not just in my opinion.
Okay, but your opinion in that respect has nothing to do with this proceeding, does it?
On April 1, 2012, the bonds went into default, so that happened before July 24, 2012. By the end of 2011, when it was represented that at the latest worst-case scenario, the city of Jackson would move in and start paying rent, the project had not been finished in the city of Jackson, had not paid in lieu of rent. By your client's own admission in June, July of 2012, with a whole room full of bankers and representatives of government agencies sitting there, the project wasn't completed and needed at least $1 million to complete it. So yeah, a lot of things have gone wrong before July 23rd, 2012. What happened after July 23rd, 2012?
I didn't ask you about that. I didn't ask you about any of this. Let me ask you about this. When your clients pay you or your law firm for your professional work, professional fee for your service, which presumptively enhances their ability to do whatever it is they wish to do under the law, Is a contract to pay you for your professional services, does that materially and adversely affect your clients, the obligation to pay you for your work? Yes or no?
No.
Okay. David Watkins never represented to you that he was working for free in doing all of this work for Retro Metro, did he?
He was an owner of Retro Metro, he was 40%. So
He
I
never
assume
told
that
you he was
did.
working for free in this, did he?
No, I don't remember saying.
You were not working for free, were
I
you?
was not.
The underwriter was not working for free, correct?
They got paid.
Not been very successful with 15-minute cap. Want me to continue?
I noticed that.
Record was over. You want me to keep on?
How much more time do you think you have?
I've got page of notes. Express it that way.
It's 10-1. I'm okay, but it's up to y'all.
I vote for us to, if I had a vote, for us to recess and come back whatever you say after lunch.
I'm okay with that.
How long would you like?
I'm good. Honestly, I have lunch with me, so I'm
Okay.
probably the quickest of anybody.
Y'all want to come back in an hour? Is that long enough for everybody?
Let's do an hour and a half.
Hour and a half, she cried.
No objection.